The equities market in India opens up at 9:15 a.m. and closes at 3:30 p.m. So, in intraday trading, stocks are bought and sold on the same day, roughly 6 hours apart. On the other hand, positional trading is when you buy a stock and hold it for days, weeks, months, or years. So, buying a stock on intraday gives you 5x leverage, whereas in positional trading, you have to pay the total price of the particular stock. So, what it means? It means, for example, a stock Reliance, let's say the price is 2000 rupees, and if you are going to buy it for intraday, you just have to pay 400 rupees for that particular stock. On the other hand, you need to pay the entire amount for positional trading. So this is the difference between intraday trading and positional trading. And if you compare both of them have their unique use. But since we will be discussing on the positional trading in this particular course, as well as investment strategies, we'll focus on the same, that is positional trading, in the upcoming lectures.